Chris Lashava with RE/MAX Heritage Professionals, and here we are beginning of February 2024, which means our stats for December are available. So for our January report, let's get into the numbers for Winter Haven, Florida. Winter Haven, December 2023, we saw 72 closed sales compared to 69 a year ago, an increase of 4.3%. Cash sales as a percentage of closed sales, 25% of all sales were cash sales compared to 27.5% a year ago, a decrease of 9.1%. Median sales price, $299,950 compared to $296,139, an increase of 1.3%. Average sales price, $304,216 compared to $278,523, an increase of 9.2%. Median percent of original list price, sellers received 96.8% of original list price compared to 93.5% a year ago, an increase of 3.5%. Median time to contract, so how long did it take a home to go under contract, 39 days compared to 41 days a year ago, a decrease of 4.9%. Median time to sale, so this is to get to closing, 81 days compared to 86 days a year ago, a decrease of 5.8%. New pending sales, 52 new pending sales compared to 70 a year ago, a decrease of 25.7%. New listings, 77 new listings compared to 75 a year ago, an increase of 2.7%. Pending inventory, 81 pending compared to 95 a year ago, a decrease of 14.7%. Active inventory, 323 homes are active on the MLS for Winter Haven compared to 230 a year ago, an increase of 40.4%, so one of our biggest changes. Month supply of inventory, we have 4.3 months supply of inventory compared to 2.7 months a year ago, an increase of 59.3%. Remember, 6 months of inventory is a balanced market, so we're getting closer to a balanced market, but we are still in a seller's market. Tune in as we reflect back on 2023 and look ahead to 2024. So 2023 was an interesting year for the housing market in that home prices overall actually increased, although it was pretty minor. So a lot of people expected home prices would go down, especially with the lack of activity, but prices still continue to go up, and I think that still largely reflects our lack of inventory. What was probably the most interesting statistic of 2023 is that fewer homes were sold in 2023 than in any other year since 1993. So it had been 30 years since we saw that few number of closed sales in terms of the housing market. So for some people that's an entire lifetime. 30 years is a long time. And it really just goes to show just how slow the market was. But again, in thinking about that, the fact that prices didn't actually crash, didn't really decrease much, it will depend on what area of the country you're in. But as we talk locally, they really remained relatively stable, went up slightly. I think it is interesting that that was in the context of the kind of the slowest activity in 30 years. What impacted that was primarily mortgage rates. We saw a high watermark of a little over 8% for mortgage rates. That really put a lot of buyers on the back burner, sitting on the sidelines, kind of waiting for rates to go down. We did see towards the end of the year an uptick in activity as the mortgage rates dropped. Mortgage rates actually dropped relatively quickly. They're in the sixes now, probably mid sixes. And so that has brought more buyers out. While the Fed didn't lower or raise interest rates, it kept the Federal Reserve rates consistent. That's not a direct correlation on what mortgage rates will do. And most of the experts in the real estate industry, and in particular in the mortgage industry, expect mortgage interest rates to decline throughout the course of this year. Maybe getting down to close to 6, maybe even 5.5%. For those people who are waiting for 3% interest rates, you probably aren't going to see that again in your lifetime. That was kind of a pandemic era. Maybe it was an error because it had to kind of created the inflation situation we're in. But I do think 6, 5.5 is probably realistic. And so as the rates go down, what's going to happen is more buyers are going to flood the market. And as buyers flood the market, if inventory doesn't change significantly, and there's really just not a way for it to change significantly, what's going to happen with home prices, they're going to go up. So for those of you who are trying to time the market, again, if you're talking about a primary residence, this is the home you're going to live in, I don't think trying to time the market is necessarily a great idea. I think you need to buy when you're able to buy, and then just hold, and you'll see the gains in terms of your equity in your home. If you're an investor, then it's a little bit different conversation that we need to have as far as when's the right time to buy. But if you wait on buying your primary residence, you're going to be facing more competition for those homes because everyone else is going to be back in the market, and the bidding wars are going to come back, and you're going to pay more for that home. And so any savings you might have in mortgage rate, you're going to lose in the price of the home. Whereas if you buy now while the rates are a little higher, you have a little less competition, you're going to get more deals on the home. You're also likely to get more seller concessions, so you can get assistance with closing costs. When we're in a market where there's too many bidders for a home, sellers have no incentive to give you any closing cost assistance or anything like that. And so you're better off buying now, paying less for the home, getting some seller concessions, and maybe paying a slightly higher mortgage rate. And then in a year or two, when rates do go down, go ahead and refinance. Then you've sort of got the best of both worlds. But like I said, if you wait, then what you're going to end up seeing is you're going to be paying more for that same house, if you can even get it, because the frenzy of you have to see the house as soon as it comes on the market and make a quick offer are likely to come back. Maybe not quite to the extreme of during the pandemic, but I think it actually could be pretty similar to that. Like I said, we're already seeing more buyers enter the market, and it's only going to get more and more common as the rates decrease. So my advice is, if you're thinking of buying, probably right now is the best time to go ahead and get started. See if you can find that right property for you, and then worry about the rate in a year or two when you can refinance. You might even be able to get the seller to do enough seller concessions to buy down the rate to something you're more comfortable with as well. So that's the advantage to buying now. Like I said, if you wait, the opportunity to get seller concessions is probably not going to be there. So you're going to have to come up with the closing costs yourself. You're not going to get a buy down, and you're probably going to pay more for that house. If you are in the market, or you just want to kind of talk about how what's happening in the market relates to your unique situation and what might be right for you in terms of buying or selling, renting, whatever, I'm always available. Please reach out to me. I'd love to help you. And as always, if you have friends or family looking in the Central Florida area to buy or sell, I would love to be the realtor of choice. Thanks again for subscribing to my YouTube channel. I would absolutely love to have more subscribers. And if there are topics you want me to cover, comment below. I'd be happy to add those videos to my YouTube library. Thanks again, everybody. Have a great day.